Good Sunday evening, option traders. This is Sam the Trader Geek with your Sunday night, February 23rd, 2025 option review. Hope you're having a great weekend, and we're looking at some of our plays that are still active after an awful Friday with the markets down big time, taking away any gains we had for the week, including an all-time high. So let's take a look at what we've got, and we start with AAOI. Looked like it was trying to rally, get over the 50-day here, this blue line here, and it just couldn't keep hold it up under the pressure from the market. We do have a positive MACD on the daily, so it's not too bad. We're still down about 39% on this play, but we do have about 26 days left for this to get going for us on this vertical play. So it still hasn't done anything wrong, doing the right things, although not as good as we would hope, but we'll hang on to this one, and hopefully with any strength in the market, this one will get going for us. ADM, we took some profits on this one, our first profit target, and nice candle on Friday, consistent with the consumer staples making a good effort on Friday and being one of the few sectors that were up. We took our first profit target, which was about a double, from a little bit over a double and a half from where we put this on. Our next target is $2.10, and we could easily come up to this 50-day moving average right here, about 49.69, and get to that next profit target about $2. Maybe it'll take a little bit more to get there, but if we do get to the 50-day, we'll look to take our next profit target on this one. Timing was pretty good for us on Archer Daniel Midland, given the strength in staples. APA, we've got a put sale on here going out to April, not doing much of anything, just a bunch of chop, which is exactly what you want when you sell a put. You want the option premium to decay. We are just a little bit underwater, 12.5%, big whoop. We have a lot of time on this to go, so I'm not going to worry about it too much. Asana, going in the wrong direction for us, probably getting close to our stop here. So our stop is at 20.79, or that's our current price. Where is our stop here? I believe it's right at this chandelier stop. So we're pretty close to this. And we have taken one profit target on here. We are down on this a bit. We have until March on this particular call, but if we can't start showing some strength and get back up over the 50-day, we'll have to close this out. MACD is not positive at all for us, so we'll see what that does for us come this next week. Let me fix this RSI, which is doing some weird stuff. I think it's the sizing of my screen. Let's try this. Yeah, there it is, a little bit better. Okay. Bloom Energy, after looking really good midweek on our Wednesday review, coming back in, giving back a bit of everything consistent with the choppy environment. We've taken a couple of price targets out on this one, and hopefully it'll hold this chandelier stop here at 23.54. We've got plenty of time on this until March. If we get any strength in the market, then this should right the ship a little bit. If not, then we may have to take the rest off and call it a day on this one, because it's been one choppy mess that hasn't gone anywhere since essentially November. You can see we're trading in the same range now for 3 months. CVX, that's a put sale, and we should be pretty close to taking this one off. We have about 87% profit, and we're down to about 17 cents. So we're getting close. It's a March put spread, and energy has been strong of late, which is nice, and getting us most of our profits on here. So I like having CVX and may roll it out to another play in April if this continues to behave. FXI, looking for a decent pullback in here so we can roll this out one more time out to April. This is our second, if not third roll of this FXI put, which is an easy way kind of to make a little bit money on a ETF that's not on an ETF that's not really that volatile. So we're down to 7 cents here. We probably shouldn't be holding it, but I'm holding on to it so we can roll it out and make a few bucks. But I want to see a little bit of a pullback. You can see the RSI is in the overbought territory. China stocks have been the hottest of late, so it's probably time for this to pull back anyway. GDX. Giving back a little bit on Friday. This is our long-term play into June. So we didn't quite get up to our next profit target, which is $3.75. That was a bit aggressive, but we still have a lot of time on this up until June. So not surprised that it did pull back in, and given that gold is a bit extended, but we'll just leave this on and let GDX and the gold plays consolidate. I don't think the run is over in gold, though it may take a rest for a bit of a while. GRAB, just chopping around. It just can't seem to really get going. Early in the week on Tuesday, it looked like it was ready to head up and then hit the 550 mark and pulled right back in. So we're back to being down 57% on it. This is a speculative play. I think it can get going, and we have until April. We have a lot of time on this, and we only have about 70 cents into this particular call. But I think getting back to the all-time highs should not be out of the question between now and April. Intel pulling back a little bit on Friday, still holding up pretty well, relatively speaking, to the market being down about 4.68% on Friday, but still holding above the 200-day, which is good. We've taken 3 profit targets on this, and we're waiting for our next one at about 4.25. So this particular play is almost fully in the money. It's a 2025 put a call spread, and so we should be able to harvest most of that if Intel continues to hold up. Iran, not so attractive after Friday's action, down about 12%. So I'm going to be considering early in the week whether this one is going to survive the week or not, given the big down candle under the 50-day holding the 100-day, and the MACD looking like it wants to go negative on the daily. So timing might not have been right given the market weakness, but I'm not terribly impressed with what this is doing so far, given that it was setting up pretty good. So another one that may be on the chopping blocks. J&J, still looking terrific, and we have our next profit target a little bit aggressive at 12.25, and let's see where we where it stands right now. Looks like about $10.60. So you can see it right down here, and we shall be patient with it. It's holding up terrifically, and J&J, good timing, and finally rewarding us and coming all the way up from 140 to 162. So that's been a nice run, and with healthcare strength, J&J is kind of leading the way. Lyft, another put sale. This one is out into June. Still break even on it. Just doing nothing but chopping around. We just needed to stay away from the 10 mark, and that's $3 away. So again, the definition of a slow trade here. Meta, we sold a new put spread on this, and we did this on Thursday. Probably should have waited till Friday, but hindsight is always 20/20. We can see we're down about 42% on this put spread, but it's all the way down at 650 to 625. I think Meta can pull in, and this was deliberately priced over by the 50-day. I'm certain that it's going to get some type of bounce or reaction at the 50-day. We see the MACD is kind of turning negative, and we see that we're not quite oversold on the RSI. We're at the 50 level. but it definitely is way off of overbought levels. And when the market bounce, I think that they'll come after this one aggressively, especially since we're already down about, let's say 57, 58 bucks from the peak. So Meta, not concerned about it at all. Our timing was one day too soon. And this has a lot of time and a lot of room to work out just fine for us in the next 26 days. Merck, another one that's 4 straight beautiful candles from a low of 81. We timed this one fairly well up to 89.5. We've taken one profit target, and our next one is at $4. So we should, if we continue to see healthcare strength, then this one should continue up, and really shouldn't see too much trouble until it hits the 50-day here at the 96th level. So Merck looking good and helping our case in terms of owning some of the defensive stocks, given the weakness in tech and other high beta stocks. Netflix coming in a bit and very quickly from the 1,064.50 level down to 1,003. So we are back somewhere still in the money, but only $3 away from the short strike. So still holding up pretty well, and we are still very profitable. We paid about $4.52 for this spread, and so it's not it's still pretty profitable for us at $13.52, or I should say $12.22, and we'll hold on to this. Netflix still showing a lot of strength, and it won't look bad unless we take out this consolidation here somewhere around the 950 level. But I'll be watching this one to see how it shapes up. But Netflix still looks really good and succumbing to some of the weakness that we saw on Friday. NVIDIA gave back about $6 on Friday, $5.68 to be exact, and was holding the 50-day. NVIDIA has earnings this week. I don't think we'll be doing anything with this covered call play. If you're holding it, and be aware that earnings are after the close, and either NVIDIA is going to scream up on better than expected results, or it's going to head back down to the lows if it's not so good. But we have a covered call play. We are just about up 5%. I may reconsider that idea, but I would see that the premium would mostly come out of those 140 calls. If we don't scream up to the upside, and if we go to the downside, I think there'll be a bid under NVIDIA, and not likely to hold much under the 200-day if it gets there at 125. So I'll have to figure out and make a decision by Wednesday, but you'll want to think about your own risk and whether you want to carry the shares and the covered call into earnings. You may even consider buying a cheap put to protect your downside on this one. That's an optional way of going. Qs, I was expecting a big move, but not in this direction. So we bought a back ratio. We collected 45 cents. And if we want to put that on right now, we would collect $1.45. So very early in terms of doing anything with this. I got the question, and we may have to reposition this, but obviously I want to reposition on strength, not on weakness. We have the 535, 545 back ratio, and now we're already $10 away from the short strike. So although this is not going in our favor initially, that's to be expected. We need this play to go in our direction, and as long as if it can't get back over 535, then there's no way we can lose money. We'll make the 45 cents, but we do want to see it head back up and head back up there soon. Otherwise, we may have to reposition or take this off. But for right now, nothing to do with this one. Still premature to make any changes at this point. SLV silver, along with gold and the precious and gold miners, down on Friday about 36 cents. We have a put here. We are at 24 cents. Still doing well. Probably will roll this out to another month. I think we're out in April at this point. Let's see if I have the text here. I don't. So let's see what we have here. Yeah, it is the April 26th put. So this has been a successive roll. So what you're seeing here is the old text. So still pretty good, worth 12 cents. Maybe time to take this one and try to roll it out as well. Now SMR, a disappointment so quickly after we put this on. We're down about 69% on it. We have a stop at 2009. In fact, it looks like we were stopped out on Friday with this one. Let me see on Thursday. Yep, we held up on Friday at 20. Yeah, no, this one is a stop out. So we're going to have to close this one out on Monday. Looks like on Thursday, we did trigger this stop and then we traded below it. So this one is a stop out and I'll be closing this one out. Unfortunately, it didn't last that long because we just put it on last week. So SMR not doing its thing like we were expecting. TLT, we have a couple of plays here. TLT has been strong of late. And so our short call is up 23% or so. And this is kind of a second or third roll of this particular put. So doing well. And so is the TLT spread. I was thinking about taking off another tranche, but we didn't quite get to the $4 mark on Friday. So if we get into the fours in terms of selling this off, then I might take some of it off on one of these days this week. But so far, this call spread doing well to 85.90. We're getting close to the short strike, which is what we want to have when we have a call spread like this. Now, Tesla, not doing well at all. We can see here that it looked like it wanted to bounce and it's back to 337. This combo play, it's probably time to take the rest of this off since we're going to be heading towards the short strike of the put. Actually, it's out to 290, so we got a lot of room, but we may just close the rest of this one out. I'm going to be cleaning house a bit this week on some of these older plays where we've taken several profit targets, and it's time to reposition in something like this. It's about time to close this one out and take our money and run. The last one is Walmart, which is a new put spread we put on. And again, early because of Friday's action, we headed down to 94. We put on a 90.75 put spread. We're about $5. We're holding the 50-day, about $5 from the short strike. And I think Walmart will find support soon. And given that this is out in April, not terribly worried about it, but we are, with the increase in volatility on Friday, down about 60% on this particular play. So it's not concerning at all, in my opinion. So I deliberately went out about one standard deviation on this one. And you can see that on the daily chart, we are already approaching oversold. We're at the 39 level. So between the earnings date and the day after, we're already approaching the 30 oversold level, and I'm expecting a bounce. But quite frankly, even if we weren't this oversold, I wouldn't be concerned about this given the time and distance we have in this particular play. Well, looks like we had some work to do on some of these plays here. I want to get them back down to about 20 plays. We got about 24 running right now, and I think that's too many. But I think by cleaning house a little bit and looking for better plays, and given market conditions, less is going to be more until the market shows us its hand. Could we have a little bit more of a pullback? Sure. Could we get a bounce? Yeah. But I think that the time between now and March expiration will tend to be a pretty volatile one. And longer term trades are going to work out better than shorter term trades, and premium selling in longer terms are going to work out better than premium buying. But doesn't mean we won't try, and I'll be looking for other plays to put on and not quite get us to the number of plays we have right now. Anyway, enjoy the rest of your weekend. Thanks for watching. If you have any feedback for me, at @TraderGeek on Twitter. Otherwise, I'll see you in the forum on Monday, and take care. Bye-bye.